Hello, I'm Grant Wallstrom, contributing editor to Internal Auditor magazine's fraud department and senior manager of fraud forensics and investigations at ADT in Boca Raton, Florida. I'm pleased to introduce this episode of Fraud on the All Things Internal Audit podcast, which provides fictionalized accounts of fraud based on actual events.
The Language of Fraud, Part 1, Word on the Street. Marie Camden, a career internal auditor, had learned to listen to her gut, and that instinct had helped her uncover quite a few fraud schemes over the years. Indeed, her boss at Powerline Inc., a manufacturing company, had taken to calling her the Audit Whisperer. Her latest assignment was prompted by a whistleblower complaint about one of Powerline's most recent overseas acquisitions, Slate, and one of its vendors, Consec. As the new parent company, Powerline needed to identify any trouble with Slate and take care of it quickly. As Camden considered the best approach to the Slate complaint, she knew that the only audit dreaded more than a morale audit was a fraud investigation. So she disguised her probe as a routine annual audit. As part of the audit, Camden planned to run a few tests, including a review of contracts, a year-over-year analysis, vendor vetting, online invoice review, and validation of services. Because her investigation was under the guise of an annual audit, those routine assessments should not raise concern on the Slate team. What's more, they would help Camden understand how the company functioned. She delayed speaking with the employees who were closest to the vendor and most likely to be involved in any collusion. By starting with general information gathering and speaking to those least likely to be involved, she could gather more details as she got closer to the perpetrators of the scheme. Camden got a major break when interviewing Larry Myers, Slate's liaison with Consec. She began by asking him general questions, such as how long he had been doing work for Slate. When he casually mentioned they often received reimbursement for general expenses and for appreciation, stuff like that, Camden knew she was on to something. Part 2, Watch Your Language. Fortunately, Slate had a policy that required all communications to be documented. So emails were numerous, meeting minutes abundant, and memos plentiful. Camden's instincts were telling her to pay close attention to the language the employees were using in these communications. If anything was amiss, the fraudsters had to be careful in how they communicated to any co-conspirators to cover their actions. Even if the Slate perpetrator contacted the vendor on personal channels, there was still a potential for the language of fraud to be evident in emails, invoices, journal entries, and more. The unstructured data would prove most useful in this case. Fortunately, IT enabled Camden to search through the impressive store of emails and other communications for her audit. Camden began by highlighting words or phrases that caught her interest. Over the years, she had developed a process in which she organized findings into 3 categories: pressure, rationalization, and opportunity, based on the components of the fraud triangle framework. As she read through a batch of emails regarding the vendor, she made a list of employees that she wanted to interview, including members of management. Some high-level managers used phrases such as help each other out, sweeten, and worthwhile in their communications with each other and the vendor. Camden recognized those as keywords of corruption. Other words that helped Camden narrow her focus on members of management, including words associated with pressure, such as uncomfortable and questionable, and words associated with rationalization, including I don't care, and even a few curse words expressed in an angry context. The emails alone made Camden suspect fraud, and once she knew where to look, the fraud was in plain sight. Part 3, Fraud is the Word. It wasn't long before Camden uncovered a communication that was as blunt as it was incriminating. One of the emails from Myers to Consec read, "We ask for a token of appreciation to strengthen our relationship and ultimately sweeten the deal." Consec representatives replied, We are in agreement and should be able to help each other out. A deeper look into the financial relationship with CONSAC provided another red flag. The $1 million year-over-year increase in spending with the vendor was disproportionate to the level of services it provided. Camden exercised Powerline Inc.'s right to audit clause to investigate CONSAC's expenses and discovered a substantial portion was being channeled to a subcontractor controlled by Slate representatives. Notably, this subcontractor appeared to be hastily established and didn't even have a website. Camden eventually was able to link a manager, a director, and vice president to a kickback scheme. The collusion between Slate and CONSAC was not at a lower level, but among supervisors and others in positions of power and decision-making. But their choice of words in emails and other communications provided all the red flags that Camden needed. Their employment was terminated, as was the vendor relationship with CONSAC. Camden's work was designated as privileged and confidential as Powerline Inc. prepared for potential legal action related to anti-bribery regulations.
This has been the All Things Internal Audit Fraud Podcast, fictionalized accounts based on actual events, brought to you by the Institute of Internal Auditors. IIA members can access the full story in this month's issue of Internal Auditor magazine, including bonus materials on lessons learned. To read more, visit internalauditor.theiia.org. For more fraud-related resources, including guidance and thought leadership from the IIA and the ACFE, visit theiia.org/ACFE fraud.